My guest today is Adam Bergman. Adam is the founder of IRA Financial, which is a US-based fintech company specializing, of course, in self-directed retirement accounts. Welcome to the show, Adam.
Thank you so much for having me, Andy. Looking forward to it.
I'm looking forward to it as well, Adam. Let's do what we do at the beginning of the show, just before we talk all things, self-directed retirement accounts and how people can invest their retirement funds in alternative assets. That's really what this is all about. Before we do that, Adam, would be great to get a little bit of background from yourself. If you could please just, tell us a little bit of a story about yourself. What's your personal and professional background? What have you been doing in the lead up to finding IRA Financial?
Yeah, so I think I have an interesting story. I was a tax attorney in New York City and didn't really know much about retirement funds other than just saving in a 401k plan. And I was an 8th-year associate, and I was asked by the partner I was working with to research whether one of the firm's clients can use his IRA to invest in his hedge fund. And immediately, I kind of thought to myself, probably not. I mean, I never heard of this. I'm a pretty smart guy, a pretty sophisticated guy. I have a master's in tax law, been a lawyer for 8 years, worked on very sophisticated deals, and never heard of this. So probably not. And then I quickly did some research, and lo and behold, I found out, wow, you can actually invest your IRA or 401k funds in alternative asset investments. So that got me very excited. And within a year, this was 2008. So within a year, I quit my job as a lawyer and I started IRA Financial. It took me about a year and a bit to get things going. And, fast forward 15 years, we have 25,000 accounts, over $4.5 billion in assets. And I found my calling. I've been blessed to kind of find my mission in life.
Awesome. Thank you, Adam. So, there's a few things that would be great to cover today, but I think to begin with, it would be useful, Adam, just to understand maybe from your perspective, everyone has a slightly different take on, what we mean when we say alternative assets. Obviously, crypto can be part of that, and we'll certainly get to the crypto side of things. But just from the top, I guess, how do you think about alternative assets?
Well, technically, a traditional asset is a publicly traded asset. So stocks, mutual funds, ETFs, debt, those are considered traditional investments. And really everything else is not considered traditional. So real estate, private equity, venture capital, hard money loans, gold. Crypto is an interesting kind of wild card because it is publicly traded, but it's still not considered a security. So it is treated as property, but not a security. So it's still kind of deemed alternative, but really everything that's not publicly traded on a marketplace is considered alternative.
Got it. Great way of thinking about it. And from your perspective, Adam, what is, obviously there are a variety of reasons and they will differ for every individual, but what are some of the key reasons why people would consider looking at alternative assets? And I suppose in this case, we're specifically talking about, a retirement portfolio, aren't we?
Yeah, absolutely. So just to kind of double click on that, there's approximately 65 million IRAs in the United States, around $17 trillion in IRAs. In the overall retirement marketplace, there's about almost $40 trillion. IRAs were created back in 1974 by ERISA, same when 401ks were created. And the advantage of using an IRA or a pre-tax IRA is, number one, you get a tax deduction for putting money in the retirement account, which is beneficial because it reduces your tax liability. And number two, as the money grows in the retirement account, it's not subject to taxation, which is known as deferral, which really accelerates the power of compounding returns. So those are really the two benefits of making and investing your retirement funds with a retirement account versus doing them in a taxable savings account. So when you marry the tax benefits of a retirement account with the advantages of diversification, of investing in assets and trust, in investing in emerging assets like cryptos, and investing in hard assets like real estate, investing in assets that have a good hedge against inflation, there's a really strong case for not putting all your eggs in one basket and diversifying so you get exposure to various different asset classes.
Yes, indeed. Well said, Adam. I suppose, in some ways, self-directed IRAs, it was once quite a niche area, right? But that has really changed in recent years. And I suppose you've been at the forefront of that. So just love to get your perspectives on, why that change has been made and, how you guys at IRA Financial are helping contribute to that change and making alternative asset investing more accessible to the average investor who just wants to look after their retirement. So why is that? How has that change taken place?
That's been my mission from day one, starting IRA Financial, is to educate people, but that when IRAs were created and 401ks were created, 1974 by ERISA, the tax code does not distinguish between retirement accounts that invest in traditional and IRAs and 401ks that invest in alts. There's only three things you cannot do with a retirement account. You can't buy collectibles like art. You can't buy life insurance in an IRA. You can in a 401k. And thirdly, more broadly, under Internal Revenue Code Section 4975, you can't do anything in your IRA that directly or indirectly personally benefits you, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such persons. So otherwise, you can do it. Okay, so it's always been in the code. So when IRAs were created, there was no reason to have a division between the traditional financial institutions that only let you buy stocks and mutual funds with your IRA, and then companies like IRA Financial that allow you to do legal alternative. Just the way the industry was broken down, the way it was started, because the traditional brokerage firms only make money when they sell you products, right? Or they give you investment advice. They don't make money when you pull your money out of the IRA to buy real estate. So there was a break at that point. And I remember when I started this business around 15 years ago, telling some of my colleagues that I worked with at the law firm, saying, hey, I'm leaving my job, I'm starting this company, and I want to let people use their IRA to do alternative assets like real estate. And I remember my friends and the partners I was working with, they looked at me like I was crazy. Like, what are you doing? No one's going to want to do that. And wow, things have changed dramatically over the years. Now it's just the norm to think about real estate or credit funds or private equity venture capital as not scary alternative assets, but very smart ways to diversify and generate alpha for your investment account. So things have changed dramatically.
Yeah, they really have, Adam. And I guess people are starting to get the picture now. But just for anyone who isn't clear, just really quickly explain what we mean when you say a self-directed IRA. What does the self-direction mean?
Okay, so that's a good question. It's something, Andy, I probably should have mentioned earlier. So the word self-directed actually does not exist in the tax code. Okay, so a self-directed IRA is an IRA. The only difference with a self-directed IRA is companies like IRA Financial, we don't sell products, right? So our only job is to unlock your IRA so you can invest in anything you want except those three aforementioned categories of prohibited transactions. So it's really the same IRA as you would have at Schwab or Fidelity or E-Trade, same contribution rules, same distribution rules. The only difference is we don't limit you to just publicly traded assets. We will allow you to do anything legal, anything you want. So that is the only difference, is it's truly self-directed. It's not just letting you pick what mutual fund or stock you want to buy, but it's opening and unlocking a whole investment world of opportunities.
Yeah, that's exactly right. And it means, of course, then, as much as those opportunities are much wider and greater, the returns potentially could be higher, the risks could be higher as well. There's a lot going on. But let's start with, you've mentioned what some of those alternative assets are, but let's dig into that a little bit. Just would love to understand anything you can share, Adam, in terms of, I guess, the kind of alternative assets that your clients would typically look at. I don't know if there's a kind of a percentage breakdown, anything like that. Just any surprising trends that are really interesting, or things that perhaps should be on people's radar, perhaps.
That's a great question. So in 15 years, I've seen it all. We've done hundreds of thousands of transactions. The norm is real estate related. So I'd say 60% plus of our deals has some real estate flavor, whether it's buying an actual hard asset like an apartment, commercial, residential asset, could be in the United States, could be outside the United States, could be real estate funds, could be joint venture real estate deals, could be hard money loans to real estate investors. So I would say 60% of our transactions somewhat involve real estate. And then I'd say the second most popular category of investments are private business investments. And there I include private placements for startups, private equity funds that are investing in growth businesses, venture capital funds that are investing in startups. And that's probably the second most popular class of investments. The third emerging is credit funds or debt funds. And it's particularly very tax beneficial to invest in a retirement account because interest, when you invest in a credit fund or do a hard money loan with taxable money, you pay ordinary income tax on the interest received on that loan. But if you do it in an IRA, you're not going to pay any tax. So with the emergence of credit funds, and you see a lot of private equity and different types of joint ventures involving lending companies money instead of investing in them, the returns are very tax beneficial generally in a retirement account. So I'd say that's the third bucket. And then gold and cryptos over the last several years, especially really in 25, gold and cryptos have become back, I would say, in style, so to speak, almost as popular as COVID, where there's just been a huge influx of investors trying to get exposure to gold and Bitcoin.
Yeah, very much. In terms of the, I suppose, overall macro situation around the world does, favor gold and Bitcoin at the moment, one would think. I mentioned that, potentially the returns are higher for savvy investors who can self-direct their retirement portfolio in whatever direction they want. Of course, that means that the risks are higher as well. How do you guys think about, I suppose, risk management, or just ensuring that your clients do understand the different risk profiles for different alternative asset buckets? How do you think about this? On a longer term frame, I guess, time frame, the risks can be lower, but even so, volatility.
Absolutely. Listen, we have a different role than a traditional fiduciary manager like a Fidelity or Schwab. We are not fiduciaries. We don't make money on investment advice. So our position is the client decides. It's a self-directed account. We want to empower our clients. We want to offer them freedom. We want them to create their own fortune. So our job is to unlock people's money, give them the most tax efficient solutions possible. But ultimately, like everything in life, it's up to you individually to make your own decisions. Sometimes, as you mentioned, there's risk involved and sometimes it doesn't always work out. But at the same time, when you buy traditional equities, there's risks involved as well. Less so maybe in terms of a liquidity, there's probably less risk, but there's still a lot of risk in terms of buying individual equities and the like. So we take more of a hands-off approach. Since we're not a fiduciary, we want to empower people to make their own investment decisions. We want to provide them all the education we can to make it more tax efficient. But we really want to partner with our clients and make sure that they're in control and they can make their own investment decisions in the most tax efficient manner possible.
And that's what it's actually all about, Adam. It's giving people the freedom to do what they want to do. Treat them like adults. Let them make their own decisions with their own money, rather than, as so many financial institutions, if you mention the word Bitcoin, they will try and literally prevent you from spending your own money on potentially one of the higher returning assets of all time. So, pleasing to hear that approach, Adam. And I guess it brings us nicely, to Bitcoin, to crypto. So you guys, I think you call, is it IRAfi Crypto? That's what you call it?
Yeah, we've been in the crypto. I wrote the first book on how to use retirement funds to buy cryptos back in 2018. I've been in the Bitcoin world since 2014. We're one of the first IRA companies to allow clients to buy cryptos on exchanges. We have our own platform that's partnered through Bitstamp. So I've been very bullish on Bitcoin. It's been 100x for me. It's been my best performing investment of my life. We want to empower people to invest and take control, and cryptos is a big part of that.
Yes, indeed. So, Yeah, well, what can you tell us about that then? So you said that, yeah, gold and Bitcoin have become popular again this year. Do you see, is this just like a cyclical thing? Is it because the price is high, so people are more likely to buy when the price is high? That's just a kind of counterintuitive way that often people think about investing, unfortunately. But just, yeah, any insights you have? Because not everyone, Adam, is lucky enough to buy in at 2014, right? So what does it look like for new people coming to Bitcoin now?
So, listen, personally, I'm just a lawyer. I'm not giving people any investment advice, but
Of course not.
I personally think if you're going to be buying Bitcoin, you should do it in a Roth IRA. And because you can lock in the tax, so long as you're over 59 and a half and the Roth's been open 5 years, all your gains are tax free. So I think we're in the 13th, 14th year of the Bitcoin journey. I think Bitcoin will be at 200,000 within the next 12 to 15 months. So I don't think it's too late to get in at all. I think it's ultimately going to go up to 1 million at some point in the next 10 years. So I'm super bullish on it. I think the U.S. has a major debt crisis coming. The U.S. dollar is weakening. There's less trust in the U.S. dollar. We can't get away from our deficit and our spending. And whether it's gold or Bitcoin, you should get exposure to it. And I think if you want to think long term, then you should certainly strongly consider a Roth IRA because you can lock in all your gains. So when I bought Bitcoin in 2014, I bought in a Roth IRA and I literally like 100x my investment. I still have it. I'm in my late 40s, so I'm not going to touch it for another 10 years. And I'm fine with that because I think it's going to go up another 100 times in the next 10, 15 years. So yeah, I'm super bullish. The journey's just begun. Whether you think it's Bitcoin or Ethereum or some other coin, listen, Larry Fink, who's the CEO of BlackRock, biggest asset manager in the world, he just came out and said 20% of your portfolio should be in private assets. Okay, whether that's real estate, private equity, or Bitcoin, you need to gain exposure to alternative assets. There's risk, but there's greater alpha. And you also want to gain exposure to new asset classes. You don't want to be left behind. So whether it's 0.5%, 1%, $100 or $1 million, depending on your financial position, you should not put all your money into equities, I think, because the way the equity market is now, it's not like you're really getting exposure to 500, 600, 700 companies. It's really 8 to 10 companies. That's the S&P 500. That makes up a bulk of the S&P 500 is about 10 companies. And I'm not sure your listeners know, Andy, but if you look at the companies that have over 100 million in revenue, 80% of them are private. Okay, so that means by only investing in publicly traded securities, you're losing access to 80% of the great companies in this country. So whether it's Bitcoin or other companies, you want to gain exposure, you want to diversify, and that's what alternative assets let you do.
Yeah, very well said, Adam. And in terms of what you guys do at IRAfi Crypto, so yeah, we talked about Bitcoin, but and there are various other altcoins, if you like, available that people can buy. Is Bitcoin, I imagine, and I hope it is the most popular. But what else is possible through your platform?
Yeah, whatever Bitstamp offers, we offer. So there's 40, 50 different types of coins, from big to small, and we just want to empower people to make the right investment choices that they believe in. So personally, I'm big on Bitcoin. There's some other smaller DeFi coins I own, including Ethereum, but my big focus has been on Bitcoin really since the beginning. That's most of my crypto wealth is in Bitcoin. It's worked out for me. I just think it's the first, the biggest, and it's so decentralized that ultimately, I'm very big believer in it. So I just think if people take anything away from this, like I love our platform. If you're a hodler like I am, it's $100 a year to have an account. We don't charge any asset valuation fees. A lot of my competitors in the IRA crypto space, they'll charge you 1% of your asset value each year, which is crazy, even if you hodl it. We have a $100 fee. That's it. It's super easy. And then you actually can hold the Bitcoin on the exchange. So unlike an ETF where you don't know what you own a share in the ETF that hopefully owns Bitcoin. Here you can actually own the Bitcoin on your phone or on your computer and you can actually see what you own in your retirement account.
Yeah, that's a much better way of doing it, Adam. I'd be interested to know, who do you see as your, I'm sure there are different segments, but who is your ideal target customer? How do you think about that? And for people listening that might relate to what you're going to say, what does that look like?
Yeah, it's really anyone that has some income. So generally our core client, and it's definitely skewed younger over the last 5 years with the emergence of cryptos. We have a lot of our younger clients are more focused on cryptos, like my kids. They would rather buy Bitcoin than some equities. But our average clients, probably in their late 40s, early 50s, and it's someone who wants to diversify. And someone that has a lot of their assets in traditional equities and says, you know what, I need to get exposure. I don't want to lose sleep every time there's a tariff issue, and I need to diversify, because if not, every time the S&P 500 drops, I can't sleep at night, and that's just not working for me. So that's our median client. It's got a few $100,000 that they want to invest, and they're looking to diversify so that they're well positioned if there's market growth or a market pullback.
Yeah, makes sense. All right. Well, let's just kind of zoom out for a second, Adam. What do you think's coming next, or how do you see the landscape, I suppose, of retirement planning changing in the next decade? There's obviously, a huge explosion of interest in alternative assets, and particularly in digital assets. Meanwhile, the kind of the AI revolution is changing the way that everything in the world works, really, and could do a lot more than that over the next 10 years. Just what do you think happens over the next decade or so in terms of retirement planning?
So it's funny, I actually just wrote a blog this weekend about it. I don't know when it's going to get published, but I have some interesting data. So the estimates are that in the next 10 or so years, the retirement marketplace is going to go from about 40 trillion in assets to about $52 trillion. And that's a conservative estimate. So the good news is the U.S. government, Congress, the Senate, whether it's the Ways and Means Committee, the Senate Finance Committee, they're very focused on attracting savers to the retirement system for the simple reason it works, right? If you look anywhere in Washington, no one can agree on anything, especially Democrats, Republicans. The only thing they really agree on is retirement legislation. You can look at the Secure Act 1, Secure Act 2, going back to 2019, 2023, respectively. There's only almost unanimous consent, both sides of the House, about the legislation. So I think for me, I'm super bullish on the retirement system. It's the best way to save. The government is making it more, they're incentivizing Americans to save more through the retirement system, which makes a lot more sense because you get the mutual tax benefit of a deduction as well as deferral and compounded returns. And they're making it easier and cheaper for Americans to save through the retirement account, plus encouraging folks to take advantage of the opportunity to invest in alts. So I think in the next 10 years, you're going to see a larger influx of people saving in a retirement account and definitely looking at the alt space.
Yeah, very much so. All right. Well, look, as we start to finish up this part of the podcast, Adam, just for anyone listening and, they're thinking, well, this sounds like me. I'm very interested in alternative assets and self-directing my retirement portfolio. They want to potentially explore your offering. What is the best way for people to do that? What should they do, Adam, and where should they go?
Absolutely. So you can go to IRAFinancial.com. There's tons of great information on different types of tax solutions. You can always call us, chat us, email us. We have a team of 100 plus really, really excellent tax specialists who can help you customize a structure for what you want to do, answer all your questions. There's no cost. And then I would also suggest, if you want to learn more, is check out our YouTube channel, IRA Financial. There's literally thousands of videos, short, long, all different types on different areas, whether it's investment related or just more on the technical side of how retirement accounts work. And there's a lot of great info that you can really absorb and learn a lot from.
I love it. All right. The link is in the show notes, listeners. But yeah, IRAfinancial.com. Adam, it's time to start to finish up the show. And we do that, of course, by running you through the very famous crypto conversation hot take round. Are you up for it?
Oh, yeah. Let's go.
Let's go, Adam. I'm just going to run some questions at you. No right or wrong way to do this. Just want you to give me your honest answers, hot take style, if you like. Question one for you, Adam, is where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Oh, I'm a maximalist, but I'm 100% bullish on Bitcoin.
Yep. Hey, simple as that, folks. Yeah. Couldn't have said it better. All right. Oh, Adam, what would you say is your firmest conviction crypto opinion?
Again, I'm going to focus on Bitcoin because that's where I truly, personally have invested and where I believe in. But with the U.S. deficit, with the fact that we just can't get out of our own way, all we do is spend. You see right now in the bond markets from the 10-year on, the U.S. dollar is weakening, and gold and Bitcoin, I think, are the two best safe havens. And I'm way more bullish on Bitcoin because of the fact that it's far more easier to liquidate, it's far more easy to use. And just from a technology standpoint, it's far more interesting than gold.
Could not agree more. Thank you, Adam. All right. Look, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, anything you like here, Adam, 10 years time, whether it's Bitcoin, IRA Financial, IRAfi Crypto, 10 years time, what does it look like?
So I think Bitcoin's at $1 million plus. I'll focus on Bitcoin. I think if you're going to buy it, you should consider it in a Roth IRA, whether it's through IRA Financial or any other institution, because you obviously need to make sure you understand the fees, but lock in those tax-free gains. I truly am optimistic in the next 10, 20, 30 years of where Bitcoin is going to be. So if you believe in the future of Bitcoin, you want to own it in a tax sheltered account so you never have to pay tax on the growth. And since a Roth IRA allows you to lock in tax-free growth once you're 59 and a half and Roth's been open 5 years, if you're in your 20s and 30s, just buy Bitcoin and hold it and just hodl it for the next 10, 20, 30 years and just watch it grow. And that's my belief. That's my opinion. That's what I've done.
An absolute no-brainer of an idea there, folks. Not financial advice, but man, wise words nonetheless. Adam, William Gibson famously said that the future is already here. It's just not evenly distributed. With that in mind, can you think of an example of the future being here right now, but most people aren't aware of it?
Yeah, so it's my company, IRA Financial. So most people don't realize that you can do alternative assets in a retirement account. There's less than 5% or so of IRAs and alts. It was about 2 or 3% 12 years ago or 15 years ago. So it's increasing, but the future is here. You can do it. The government wants us to diversify. If they didn't, they would not allow us to buy alts in a retirement account, but they do. So it's my mission and my passion to educate people and let them know you can do it. This is the way to do it. And here are the tax efficient ways to accomplish what you want to do.
All right. I like it. It brings us to our final question, Adam, which is, what is your favorite science fiction book, film, or TV show?
Oh, that's a good one. My favorite sci-fi, there's so many. Probably Star Trek. I've always loved Star Trek, going back all the way to William Shatner, because I just always been fascinated about exploration and opening your mind to different things. So it's another way of just looking at alts is like, don't just limit yourself to like one spectrum and one narrow tunnel. There's so much of the world to explore, and you can use your retirement account to invest in it.
Yeah, I love it. I love the Star Trek reference. Yeah. Shout out to William Shatner and, of course, Dr. Spock. The original OG Star Trek crew, the Enterprise, indeed. Look, Adam, this has been a lot of fun. Thank you so much for coming and spending some time with us today. Just to close it out, again, please just make the case for why people should come and look at IRA Financial and where they should go to find out more.
Yeah, definitely IRAfinancial.com. Think about locking in tax-free Bitcoin or other crypto gains. Again, no investment advice, but that's what I've done. That's what my family's done. And it's worked out really well. And it's like you said, Andy, it's literally a no-brainer. If you put $100, $1,000 away, just let it grow and take a chance on Bitcoin. I think the reward far outweighs the risk, personally.
Awesome. Thank you so much, Adam. All the best, and bye for now.
Cheers. Thank you.